our open API and our open banking platform has become very interesting and very valuable to that specific part of the wealth industry, the robo-advisors, because they can not only access all the content, all the product in one place, but they can also get all the value add services like the asset management tools, like the allocation tools to be able to correctly rebalance the portfolios across a client base of thousands if they need to fully integrate on an API. So to avoid human error in rebalancing processes, everything can be done and automated with machines. And not only that, it's also the omnibus accounting, meaning the ability that single organization can manage thousands of clients. Well, they can do that in the way that we set up our wholesale solutions, aka the white label relationships or introducing broker relationships. If you look at MiFID II and GDPR, really what that's doing is it's saying I as a consumer can now decide who can access my bank account and to whom I wish to share my personal financial information with. And at the end of the day, I mean, that is empowering me again as a consumer. And I think that is, in essence, that's the right way to regulate. I believe regulators are also recognizing the fact that technology is the future of financial services. They're staffing up, they've got resources, so they're looking for new staff. And what type of people are they looking for? Engineers, software developers, testers. I mean, this is clearly a leading indicator that regulators recognize that technology is the future for financial services. Hong Kong, for example, is a great example. You already have live what I would refer to as a regulatory sandbox. So this is where the local regulator understands that to push the boundaries on technology, it might not fit in the square that they currently regulate. So with limited liability, so we draw a box around your service, you can have 1,000 clients or whatever the box is, they can put you inside that box, the sandbox, and allow you to operate with a limited license. So that allows you to test new technology first financial services in a controlled environment without causing, financial catastrophe. And I think the fact that they are pro innovation in this case really says to me that they recognize technology is the future, and they also recognize that the future has not been met yet, and they need to discover and work with these new counterparties on how to regulate responsibly. That really plays into this whole concept of what is product and what is product manufacturing and product distribution. We've heard a lot historically. I think it's also the future of sales in financial services. I don't think the product manufacturer is necessarily going to be the product distributor in the future. That's where we are today. The traditional investment banks of the world manufacture everything and distributed everything. Much like Tesla and Apple manufacture and do all the R&D in a full stack business model, they sell it all through their own retail franchises as well. But I think perhaps where we are is more of an open banking environment, maybe something that's a little bit more like the Googles of the world, an open platform where you may have the product manufacturing, but the product distribution is most certainly going to come from potential lots of different counterparties. You've had some people reporting already now around the Amazons of finance. Amazon could arguably be the third largest bank in the US if it wanted to be, through its distribution, not through the fact that it has banking operations, but sheerly through its distribution channels. The future of collaboration and partnerships is really going to define the success of the organization or not. The wrong decision with the wrong partner could cost you the opportunity cost of the right decision with a partner that you forego. So I think that that's really where the challenge of competition or that dynamic is gonna live.